there is a chance that the hot investment will burst next year. During 2021, the stock market is going to have another good year. A lot of people are excited about the S&P 500. As of December 13th, it had more than doubled its average annual total return of 11% over the last 4 decades. But for cryptocurrencies, things haven't been good at all. They've been great. This year, the total value of digital currencies has gone up by 176% to $2.14 trillion, which is about the same as the value of all of the currencies together. In the past few years, investors have been excited about things like decentralized applications and decentralized finance, DeFi, the rise of non-fungible tokens, NFTs, and the huge potential for blockchain-based games in the metaverse. Cryptocurrencies, on the other hand, are also after life-changing gains, like the more than 45 million % rise in Shiba Inu meme coin over the last year, SHIB minus 1.06%. This may not be the case in the next year. Coins as a whole could go down in 2022 for the following 5 reasons. 1. History suggests reversions are commonplace. When it comes to the crypto market, history shows that it is in trouble. Even though big rises have happened a lot over the last decade, they're not the only thing that happens. Reversions happen after these rises, too. Since March 2020, the value of all digital currencies has jumped more than 14-fold to $2.14 trillion, making them more valuable than gold. This is a little like the 35-fold rise in the total value of the market between March 2017 and January 2018. However, after the January 2018 surge, the value of all cryptocurrencies would fall by about 90% over the next 11 months. We've seen similar changes in individual cryptos that led to life-changing gains, too. Popular tokens like Nano, XRP, and Litecoin had short-term gains of 24,000% to nearly 462,000%. These tokens are very popular. All went on to lose 93% to 100% of their value in a 12-month to 26-month time frame. So what? Trading euphoria always comes back to bite you big in the cryptocurrency world. This is why. 2. Blockchain euphoria outpaces its use case. People have every right to be excited about how blockchain technology could change the world in the years to come. If you use DeFi, you can make almost instantaneous cross-border payments at a low cost and make the process easier so even people in emerging markets can be a part of it. There are also smart contract-based blockchains that can change the way things are done in the supply chain. Investors always, and I mean always, overestimate how quickly a new technology or service will be adopted. This is true for every single next big thing technology. We've seen it happen with the internet, business-to-business commerce, genomics, 3D printing, and now, blockchain technology. We've seen it happen before. Blockchain is exciting, but it hasn't been widely used yet, and it hasn't even come close to widespread use. Businesses aren't likely to support big projects until there's proof that they work in the real world. That's why we won't be able to see this proof until businesses start to embrace the blockchain. It's a tricky situation that could put a stop to this huge rally. Another reason that cryptocurrencies might crash in 2022 is because they can't separate from the stock market. In many ways, digital currencies are seen as separate assets and a way to protect against the general market. For example, Bitcoin, BTC 2.38%, makes it seem like there are only 21 million tokens. People see Bitcoin as a good way to store and grow their money because the US money supply is growing. At least, that's how they see it. People have a problem with cryptocurrencies because they haven't held up well when the stock market goes down or goes back up. During the fourth quarter of 2018, the S&P 500 came close to a bear market, a decline of 20%. It also went down from about $222 billion to about $130 billion in the same amount of time, a 41% drop. 5 weeks in February and March of 2020 saw the crypto market fall hard, too. Because there are more and more signs that the stock market will crash or have a big correction in 2022, I want to tell you to be careful. 4. Margin debt wreaks havoc. It's not hard to figure out why cryptocurrencies could fall in the next year. Margin is the amount of money that investors are borrowing with interest to buy or short sell stocks. Investors who use margin to leverage their trades can sometimes make more money. There are some risks, though. If the securities that are being bought on margin don't move in the direction that they should in the short term, the brokerages that loaned the money might come after you. Investors will either have to put up more money as collateral, or they may have to sell assets to pay for it. As a margin call, this is when someone asks for more money. Because there are so many different crypto exchanges, it's hard to figure out how much margin debt is out there. But don't forget that there are plenty of opportunities to use leverage out there. This year, some people were able to use 100 times more leverage on their cash positions when they traded Bitcoin. It's possible to have so much leverage that even small moves in Bitcoin could result in a margin call and the need to sell. This happens all the time in the blink of an eye. There could be margin calls if the music stops in the cryptocurrency market at all of a sudden. 5. Meme coins lose their magic. There are a lot of fear of missing out moves that people make, and they could kill the cryptocurrency market in 2022. As of this year, almost every coin with the Japanese Shiba Inu dog breed on it has been going up in flames. Dogecoin and Floki Inu are both up more than 3,100% and 2,763% through December 13th. It's true that these meme coins all have one thing in common. They don't have anything that makes them better than other coins. Shiba Inu may be one of the most searched digital currencies this year, but that doesn't mean it has real-world appeal or long-term value. ERC-20 tokens built on the Ethereum blockchain have high fees and take a long time to process. Shiba Inu is one of these. Nothing about Shiba Inu, or Dogecoin or Floki Inu, for that matter, suggests that businesses will use it as a payment method in a field that is becoming more and more crowded with blockchain projects. This isn't true for Shiba Inu alone. People who bought meme coins because they were afraid of missing out could see crypto euphoria quickly die down. Don't forget to subscribe to our channel.